Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Thursday, the Australian dollar reversed Wednesday's gains and posted a fresh low that was around the region of 67.30.40, where the support is. In light of the pattern, the market is somewhat negative and may see further pressure on that level. A break of 67.30 would expose the next region, which is the 60-day moving average, coming in around 66.60.80. This is seen as a key point and may see some technical buying from that level. Any advancement should find resistance around 67.85 on the day. With Jerome wrapping up his second day testimony, he did say that, or reiterated to lawmakers on Capitol Hill, that further rate increases were a pretty good guess of where the US central bank was heading if the economy continued in its current direction. With the current US Federal Reserve interest rate around 5 to 5.25 as of June the 14th, the market is now seeing the Fed's dot plot indicates that we could see around 5.5 to 5.75, which is 225 basis points left in this current hiking cycle or hawkish cycle. With the euro pulling back, now looks towards the region of 109.30 and maybe lower to 108.80.90. I mentioned yesterday there was bearish divergence, and with it kicking in, along with the rejection of 110.55.80, could see weakness into today's price action. Keep an eye on this RSI as it breaks the midway point, and a break of 108.80 would lead further to 107.70. Dollar yen powers on, clears the level of 142 on Thursday, and now closer to the objective, which is at 145 as we now trade around 143. Although there's a little bit of divergence in the RSI, the trend is still relatively strong to the bull case, and we can see the two uptrend lines. There's a lot of work to the downside to reverse this current pattern. Nevertheless, overall, any pullbacks to be shallow, and I do anticipate the target of 144.5 to 145 eventually to be reached. Looking to sterling, well, surprise or no surprise, some may be asking, after Super Thursday's whipsaw price action, sees the Bank of England hiking 0.5 percentage point after a stronger than expected inflation reading this week. Along with that, central banks in Switzerland, Norway and Turkey also raised interest rates on Thursday. The Bank of England's Monetary Policy Committee, or the PMC, voted 7 out of 2 to raise its main interest rate from 5% to 5% from 4.5%, and which showed the UK inflation unchanged from the previous release this week at 8.7%. In light of the pattern, the whipsaw price action, as you can see, the market is still very much holding to a potential rise on a broader aspect, that is towards 130. Any pullback, which is currently seen at the moment due to that shooting star, then we're looking towards 126.65 before any bounce. Gold continues to press lower and now clears that key level of 1,928 and reaches its objective of 1,912. But that being said, although the technicals are oversold, the ADX is still supporting a bear case, which could see the market eventually fall towards 1,850. The roller coaster ride for oil is back again after the market backs away from the call of $74 a barrel and now looks back to the 65 as we are sitting middle of the range around 69.5. Weaker technicals could see a slightly softer day with immediate support coming in now at 68.75 to 66.5. Well, that's a wrap for the week. Thank you very much for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.